where they looked at the houses in the car fire and they found roughly about 80% of the homes burnt because of embers, not because of flames.
And that's where we have the win. I'd rather deal with fire than tornadoes and hurricanes, because you can't really predict those, you can't really prevent it.
And I'll tell you, I actually had a customer in the Altadena fire that did these bullet points when they first came out, and their house is still there. It survived.
Matt, thanks for coming out today. Wanted to just talk to you. We've known each other 12 years now. You're my insurance agent for everything that I have. And wanted to talk a little bit about fire insurance, how it's related to real estate, what we're seeing, what we've seen change over time. We've seen so many changes over the last couple of years, and people have questions. So I thought today be a good day to just go over some of the questions. But first, wanted to do a little bit of an introduction about you. You've been with Farmers for 20 years. You're located here in Palo Cedro, California. It's a little sub-city of Redding. You were in the Air Force, stationed at Travis. You graduated at Simpson University. You've got 3 boys, awesome wife, Nicole. And you have one of the largest branches in the nation for Farmers, and certainly one of the largest north of Sacramento here. So I thought you'd be a perfect person to talk to and just go over some of these questions. So thanks for coming. So what's happened in the last 7 years since the car fire, camp fire, all these big fires we've seen? I remember when I bought my first house, before that, homeowners insurance was just normal, right? Everyone was paying the same kind of typical rate, no real worry, but now that's shifted. So what have you seen take place over that time?
So a lot has changed. You know, when the car fire locally here was our big catastrophe that everybody remembers, you know, as the most impactful, but we had a long string of them. And, you know, what really brought about all of these fires was the drought, right? We had a drought that was extended. It made fire season longer. It made fire season like 10 months out of the year instead of the traditional, you know, 3 or 4 months in the summer and fall. And it exposed a deficiency that we had. That I think we're moving in the right direction with public policy and all those kinds of things. But the insurance and the difficulty finding insurance is partly a casualty of that. But what happened with insurance companies in our community after the car fires, we actually, as a community, we had a lot of catastrophes, and in catastrophes are losses that are over $20 million for our community.
Got it, okay, for a
and
community.
So, correct. So for our community, we had the car fire, we had the Delta fire, we had the Zog fire, we had the Dixie fire, we had the Hail-mageddon, the Snow-mageddon, and the number of losses that we had for our community far is outsized by our community's, you know, contribution to the insurance system. We now have become more of a high-risk community.
Because we're a smaller town, more or less.
Smaller town.
In comparison to...
And a lot of money came in from those claims.
Yeah.
So
remember the hail damage, all the roofs.
So just like literally you can actually sometimes find more options and affordable pricing even just going south to Red Bluff. The people in Red Bluff have far less of a difficulty finding insurance typically than the people up here.
Because they're Tehama County versus Shasta.
Yeah, and it's more like they just didn't have those losses.
Yeah.
So it's very interesting for people to experience that in Shasta County, where they a lot of times will move from places like Shingletown or Mount Shasta or Oak Run or Whitmore, and they'll say, "Hey Matt, you know, my insurance agent, can I move to Redding to be safer? And will I find more insurance options? Will it be cheaper?" And I say, yeah, you know, I know that's the perspective for people, but for the insurance industry, you're just moving from one town that burnt in a fire to the town that burnt in the car fire.
Unless you're going like downtown, urban Redding.
Even in Redding, like just urban Redding is having difficulty. And we're finding that, you know, that insurance companies just have run out of room, have run out of appetite for even any part of our county. So that's difficult for people to hear, and it sometimes slows or stops you know, sometimes transactions, because people realize that, wow, you know, I thought I was going to do myself a favor, get cheaper insurance, lower my costs. And insurance can't be the only decision factor in a real estate.
Well, sure. Yeah.
But for at the moment, it seems like a lot of people are treating it like that. And it just shouldn't be that. But we do hear a lot of people, they call and they're really worried. They'll give us a list of properties, say, can you hand us a list of properties and tell me what are the insurance options for each house and how expensive is it going to be? And the market's really evolved since the car fire, because we've seen a exit of insurance companies, not just for wildfire, but we've had some challenging regulatory environments. Insurance is regulated at a state level. There's an elected politician that sits over the top of it called the insurance commissioner.
Right.
And our insurance commissioner may have been trying to do us a solid and try and keep the rates low. But the problem with that is that, you know, just like I tell people all the time, imagine if there was a milk commissioner and the milk commissioner walked into Walmart and said, I understand that it costs you $5 to put milk on the shelf, but we're not going to let you sell it for that. You got to sell it for $2. Well, what's Walmart going to do? They're going to stop selling milk. And that's what we have with the insurance commissioner at the moment is you can go too far trying to keep the rates low to where you create no market.
And that's what happened, right? You had all these people, State Farm being a big factor in that, but all these other companies pull out of California because it didn't make sense from a business perspective, right?
Well, if it's costing you more, so like for a lot of these companies, they were spending, I know that some of the big name insurance companies were spending $1.30, $1.40, $1.60 for every dollar coming in.
Yeah, that just doesn't make sense.
Well, it's not just the management or the employees of the company losing money. It's literally they have to have the cash to pay for our homes. And if they don't have the cash and that cash dwindles,
Something happens, it's not
they
fair.
have to cut customers off. They can't take new ones because you can't just ask anybody to insure your house. You have to ask a large corporation with a big old pot of money to insure your home.
Absolutely.
And when a town burns down, they actually have to have the money.
Yeah.
And so the insurance commissioner's role is not just keep the rates low, it's guard the market so there's competition. Guard the market so that you can find insurance. Guard the market so when there's a catastrophe, they can actually pay for it.
And that's one of the big shifts we've seen when people have left, and there's only a few insurance companies, big ones left, like Farmers. California Fair Plan, which years ago was last resort, wasn't very known, but I know now, in probably 80% of our real estate transactions in some form, they're looking at the California Fair Plan.
Correct.
In Shasta County. So what is the California Fair Plan? Because a lot of people don't know.
So the Fair Plan was made in 1968, and it's not the state. The state legislature created it out of difficulties of finding insurance in, ironically, the Palisades. So Pacific Palisades,
Which is
Altadena,
as everyone knows.
Correct. A lot of the people that are in those neighborhoods still have the Fair Plan from when it was made. And they've had the Fair Plan for a really long time. So those communities have always had issues of brush, it's chaparral, it just grows there. There's dense population and then high winds. And it's always been that way. And it's burnt, repetitively. So it burnt in I believe in the 20s, the 30s, the 60s, the 90s, and then now. So, a lot of people will want to look for headlines or catastrophe or doom and gloom. And so let's say we've never had wildfires like this. We always have.
Yeah, but it's more people have built more into the wildfire
There's
area.
more people.
So there's now more houses to burn.
Correct. There's more people. The dollar amounts are bigger. People have a lot more stuff. The quality of homes is a lot better. And the Fair Plan made in the 60s, right, was very limited in contract, not a normal policy, just basics. So it stands for fair access to insurance requirements. So when you're required to get insurance because you have a loan on your house, that was its creation. And so it only covers the named perils of wildfire, structure fire, smoke, wind and hail, aircraft, automobile,
and everything else,
vandalism.
people get a wraparound
Because it's incomplete.
policy, right?
Because it's incomplete and it doesn't cover everything that a homeowner would typically want from a home insurance policy.
Personal belongings.
Well, no. So the Fair Plan is the structure, contents, loss of use, everything that you.
So it is content.
Yeah.
Okay.
It does cover all those things, but for the perils that are named on the Fair Plan.
Fire.
So the perils that's missing, you got theft, water damage. So like if a pipe bursts in the house and floods the house. Or you could have brownout, power surge, weight of ice and snow, falling object, liability, Okay, so all of that isn't covered by the standard fair plan contract, you got to buy a separate policy, and it's called a difference in conditions policy, and sometimes people call it a wraparound.
Okay.
So that's what its policy solution would look like for a homeowner's insurance, or for a homeowner if they can't find insurance. But the way the fair plan is designed, it doesn't run on a profit. It doesn't make any money for the participating insurers. And the way the fair plan operates is the board members of the fair plan are the insurance companies of the state. So Farmers has a board seat, State Farm has a board seat. And when the fair plan has a deficiency, the insurance companies for the first $2 billion of its deficiency have to bail it out.
So the insurance companies are paying into the fund.
They pay into it when it runs in the red.
Got it.
And when it runs in the red too far, past when the insurance companies themselves can't bail it out, then us as citizens get a special loss assessment and effectively a tax on our insurance policy.
This year, we're having to bail them out.
Yeah, this year, the LA fire is more than what the fair plan has in the bank. It's more than what the insurance companies are obligated to bail it out for.
$2 billion.
And so next year on your insurance bill, you'll actually see fair plan loss assessment and a charge for the LA fire.
An extra premium. Interesting.
Yeah.
Because a lot of people, I think, don't know about the fair plan. It's thrown around. It's always called the unfair plan, by people that I hear. But people think it's the state. They don't understand. Yeah. So this is good. This kind of helps educate people as to what it looks like from a 10,000 foot view. So the companies that left, well, let me back up. So when you're insuring somebody and a buyer's out there they're looking at houses, how are you or the insurance company determining if they're in the high fire, if they are, is it a map? Is it close distance to a fire station?
So there's been a real disorganization in how the insurance market operates as to what's high risk, what's not. And what has happened is a lot of insurance companies will pay a vendor for a map, for data, and there's a bunch of different map companies. And then there's even the fire department's map that they have, they just came out in June. And so they adopt some kind of metric for them to be able to determine what's eligible and what's not. And they have to publish it with the Department of Insurance and say, this is the eligibility rules that we're using. And so whenever they, are going to use eligibility rules or a map, they publish it with the Department of Insurance to tell them how they're going to do that. So from company to company, they have their own proprietary or game plan on how to deal with this. And there's not one size fits all map that you can go to and say, this house is going to be hard, this house is going to be easy. Okay. What's made it even more complicated is the efforts of the Department of Insurance after they realized they have a problem, after they started trying to correct some of the mistakes that they were making, trying to cure the insurance market. They kind of made some agreements to hopefully get every insurance company to come back into each zip code if they're going to do business in California, and take so many people in each zip code.
Because that's what you've said. They've taken a few in each zip code, and then once it's full, they're kind of no longer insuring, or that insurance company is no longer.
Yeah, so if they have a footprint there, the intention is if a neighborhood burns down, it not all be with Farmers and not all be with State Farm.
Got it.
So like in that LA fire, State Farm had a large surplus of customers down there that they probably shouldn't have had. They had a concentration of customers, and now they're dealing with huge losses and a lack of capital to pay for it, right? So to prevent that, they're trying to make a market where each insurance company not only is using maps to determine eligibility, but looking at density. Do we already have enough homes in that neighborhood that we've met our obligation? And if we do, we need to pass on taking any more.
Do you see, that's great information. These other companies, State Farm being the biggest one that have left, and then USAA, AAA, all these companies have left Shasta County more or less, but sometimes California as a whole. Do you see them coming back into California? I know new companies have been jumping in, a few.
I think if the conditions return to where they can make money and not lose money, I mean, they're a business.
Yeah.
And the thing about it is that if they can make money again there, they will come back. But they've got to see the conditions on the ground change. And so now the effort is, all right, we've got a way to try and look forward to try and cure the market for insurance and how each insurance company will take some people. But the conditions on the ground are we're still having these fires and still lots of houses are burning. And every year I get customers to call and say, is anything getting better after we just saw another town burn down?
Yeah.
And we still are having that. And you're gonna continue to have fires. This environment always will burn. So just like I tell people, there have been ecological disasters like this in the past. And if you look at places like Oklahoma is habitable. People live there.
Right.
But there was a time not that long ago in the 30s where it was the Dust Bowl and no one lived there. And that's where the Okies came from. They moved to LA. That's what the Grapes of Wrath is about, is people exiting Oklahoma because it wasn't livable. And so the government came in and the government told people how to live and farm the land. They changed their practices. And we're having that moment now in our state. And something important to notice is in real estate contracts now, it's required to get a CAL FIRE inspection. There's now new standards for defensible space. So the next effort going forward is trying to make the conditions on the ground that affect insurance paying and how often and how frequently and how severe it's paying for these losses reduce by our efforts as citizens on our each and every parcel.
And that's where we have the win, I think, from fire. I'd rather deal with fire than tornadoes and hurricanes, because you can't really predict those. You can't really prevent it. Where you can hear, and that's where we're seeing like the new fire maps and new things that are coming out, which we'll talk about in a minute. But if people were to mitigate the fire risk on their own property, and I think that's where people are starting to band together.
Yeah.
I know now neighbors are talking to neighbors like, hey, you got to get your property in better condition here because it's affecting all of us. And I think if we're able to do that and chain together, it's going to help in a big way. But what are some of the things you're seeing that new laws, requirements that are coming out for defensible space around the house, around the property? Because I know CAL FIRE and the state are pushing in a big way for that.
So there's an organization that CAL FIRE and the insurance companies gave, it's a nonprofit, it's called the IBHS, the Institute for Home and Business Safety, or Business and Home Safety. And so the IBHS launched a website off of a study. It's called Wildfire Prepared. And everything that you see, whether it's the insurance companies' websites, the insurance commissioners' websites, CAL FIRE's defensible space guidelines, they're all in alignment now. And they all mention the same like 10 or so bullet points of what people need to do to make their house safer. And the reason they're talking about this is because until we get our community to not burn down like it's been burning down, where we don't have thousands of homes burn in every fire, we're going to struggle in the insurance market until that happens. So we've got to make these houses, and they pinpointed a lot of stuff. And I'll tell you, I actually had a customer in the Altadena fire that did these bullet points when they first came out, and their house is still there. It's survived.
That's pretty cool.
And so she did the Zone 0 requirements, and she did all of the fire hardening, rules on her home ahead of time. And so these have been known for a couple of years. They're technically the law under CAL FIRE, their new guidelines. They're not quite enforcing it yet.
Right.
They're educating at the moment. And so they're telling people about it, but it's not quite there as a point of enforcement. And so what these rules are in the new Zone 0 is they did this IBHS study where they looked at the houses in the car fire, and they found roughly about 80% of the homes burnt because of embers, not because of flames.
Right.
And so when
the embers travel.
So when the embers fly ahead, where are they landing and what's the vulnerabilities? Well, if you think about the vulnerabilities of houses in these communities like Redding proper, a lot of houses burn. And some of them are pretty new homes, made out of stucco, tile roofs. And why did they burn? And so if they're made out of these fire resistant materials already, the small vulnerabilities are the first 5 feet around your house, where the embers are falling in the bark that's common in people's landscapes. It's the bushes, the small plants, and people say, well, but those are green and how can they burn? And I'll tell you what, I've thrown plenty of green vegetation onto a fire in my yard and it burns. The other thing that happens too is that your sprinklers are probably off. The power might be off. You're evacuated for a week and all those plants in 100+ degree weather are now brown.
Dang.
So those embers fall in that bark, they light the vegetation, and then they're burning against what would otherwise be this non-combustible structure. And it's got vulnerability still. Behind your stucco is foam that melts.
Yeah.
You know, what these
Eaves
bushes,
or wood.
the eaves are wood. What these bushes are up against is the eaves, and then the venting may be not woven tight enough.
No gutter covers.
Correct.
gets
Correct.
in on the leaves
Yep.
and starts burning. Because when the fires happen like that, like we've seen, wind is obviously prevalent.
Yeah.
Or it's making its own weather. Like
It's making its own weather. Yeah, it's creating tornadoes. Well, tornadoes don't happen here on their own, but in that fire, it's a totally different game.
Yeah, like in my neighborhood, every house is stucco, every house has a concrete roof, and we saw 40 of the houses burn down.
Correct.
It was amazing.
And what daisy chains all of them together are things like wood fences or vinyl fences, and they're combustible. And I hear a lot of people say, well, but these non-combustible structures, they can't burn, or this metal building, it can't burn. And I'll tell you, it was made in fire. Most of these things were forged in fire. When you have these fire tornadoes, when the homes become the fuel, they're 1,000-degree fires. They're super hot. And so everything burns.
Right.
And when they get to that point, that's what we have to stop. We have to stop the progression of bark to bush to fence to house. And then once it gets to the house, just like in the forest where it goes from forest floor excess, grass in the ground because of lack of grazing or lack of previous fires, to then the bushes, what they call the ladder fuels, then to the canopy. And then once it's in the trees, it's all over.
Yeah. And it's forever changing. So I think when I'm always trying to educate people, have a conversation with an insurance broker. I'm always telling them because you're so knowledgeable about what is happening, because people are trying to get cancellation, their policies are doubled. Everybody is dealing with it. Nobody, I think, is excluded from that. And until things change, I think it's going to be that way for a while. It's kind of the new normal. It's been for years now. But what's cool about you, and I always tell people this, Matt can write policies, not just farmers policies, but other brands as well that are out there,
Right.
And really educate people. So just kind of leave it with this. If somebody had questions, and we'll link all your information in this video, but what's the best way? Is it to call, email, go to your website?
Yeah, I mean, the best way to contact us is call, give us the information. We have an input sheet that we fill out. And then, I'm not going to lie, we do get overloaded because the system is difficult right now. There's a lot of people, and when we had these fires this last weekend, we had an influx of people that don't have insurance, said, I'm not going to participate in the fair plan. I'm not going to participate in the limited options that I have. I'm frustrated. I'm just not going to have it. And when the fires people start calling again.
Yeah, and in Shasta County,
Correct.
2 weeks ago, we had 3 fires in a
Correct.
day.
So we got an influx of customers, and so we get bombarded sometimes with that. And so we try. And so if you're trying to shop around, I would just discourage this shopping around thing for a cheaper rate right now, because if you have insurance, the difficulty of switching to another company, going through inspection and passing from that insurance company, work with your broker to try and keep your price down. See if you can manage to pay it. And if you really can't, then you may have to shop around if you just can't afford it anymore. But consider, if you've been canceled, don't wait. Don't wait until your policy's gone. Don't wait until the fire's burning, because you can't get a policy if there's a fire and a catastrophe that's been declared. With these small fires, we can have binding restrictions where the insurance agents from every company say we won't take a customer until that fire's out. And so that, along with a real estate contract, you're trying to close escrow, but there's a fire in the neighboring town. If you haven't bought the policy for that real estate contract to close, it won't close.
Yeah.
So
get ahead of it.
Get ahead of it, far ahead of it in your early days of your real estate contract. First week, find the policy, establish the policy, get it ready to go, find out what day you're closing, and preemptively buy the policy so that you can close. And we're telling people to do that because of the fires, along with you can have, with this new way of each insurance company taking so many people in each neighborhood, you can find opportunities that were there now have closed. That insurance company isn't willing to take anymore.
Yeah, they're not always going to be there.
No, we have often the insurance companies will send us an email and say, we're oversaturated in that area.
We're closing it.
And then if you're in escrow, you lost your insurance option.
Yeah, and we've seen that when the fires, good point, we'll kind of leave with this. When we've had big fires here, we've had properties in escrow and we can't close.
Yeah.
We can't close until the fires, what is it, 80% or 90% or something like that?
Depends on the insurance company. Some of it, they want it 100%, some of it it's 70. It's their prerogative.
Got it. Okay.
So
this is great. Thanks for coming in. Guys, reach out to Matt if you have any questions, and thanks for your time.
All right.
Thanks, guys.
Thanks.